Hey guys, welcome back to another video, and on this one I'll show you how to predict and catch the next spike when trading your boom and crash index, so stay tuned. Before I start, I must also say that we are very lucky to have the boom and crash index at our disposal. It's the only asset in the world that allows us to trade spikes and already telling us the direction, so you can see there's a lot of benefits on that one. So now to do this, it's very important if you want to make more success out of your boom and crash trades. It's pretty much easy. It doesn't look like much, but trust me, it's really profitable. You know what you have to do now is, if you have a PC, you can use your phone. I think I'll make a separate video for that. But if you do have a PC, you might just want to go and set up this line strategy. Okay, you just want to put on the horizontal line across your chart to mark the support and resistance of your 1 minute candles. This will help you detect the next spike before you actually get them, so you can use you can enter at that moment before the spikes comes out. Alright, so before I go into full details, I noticed on my YouTube channel many of you watching have not yet subscribed to this channel. So please, if you are not yet subscribed, please do hit the subscribe button if you want to get more informative videos concerning your indexes, concerning forex trading, concerning Nasdaq indices, and many more. I'll be dropping more videos like this in the future, so please go like and subscribe to join the Nasking family. All right, so let's dive in and get more full details on how you can properly use this strategy to make more profits. You know, combining it with our best V75 strategy we've been using so far, I'll show you how you can use it to increase your odds of winning more trading boom and crash, specifically on your 1 minute time frame. Alright, now to go into full details, it's very easy. As you can see, it's self-explanatory. Just as you're watching the video, you see what I'm doing. What you need to do is you have to go into your tools. You have to use the D trader on your on the platform. You have to use the D trader. Go to your tools and pick up the line tool, so you can be able to draw across their chart. You know, we're talking, the case study here is crash 1000 index, and the crash 1000, the crash and the crash 500 always tends to spike downwards, right? The boom goes upside, so the crash tends to spike downwards. So you know, we're going to look for every single multiple touches you're getting on your chart when the market comes down and start retracing up a little bit. So those multiple touches you get, you can call them, like, it's like your support and resistance. It's like bullish reversals. But whatever single multiple touches you get on your chart, you just go over and pick up your line tool and draw across. As much as you get, you make sure you draw those lines that you've drawn, those touches. Those are the touches I'm actually using the rectangle tool to draw across, to signify that at that point the market took a spike downwards for a sell. So it's very important for you to go and use the line to draw over on your chart to get those touches, and then you can highlight them with your rectangle tool, or you can just know them without using those rectangle tool, of course, because it's very easy to detect. I mean, just looking at the chart, you can already detect, you can already predict the next spike. I'll show you an instance, and I will take the positions on my MT5 on my phone, and I'll show you the results. Those on the group already know how familiar I am with it, and I always use 5 standard lots to go in. You know, when I see it's approaching one of the lines, I quickly go in and use 5 standard lots, a very huge lot size. You can use whatever lot size, depends on your account, and you know, risk management all important. So you go in with a huge lot size, and then When you are in, when it's almost at the line, you go in, and when you see it crosses the line, you can close because there's no spike. You wait for the next line, you go in again, you can close. So I'll be closing like around $10 per entry if I didn't catch any spike at the line, which I was expecting a spike. But then if I don't catch any spike, I'll close like $10 loss with my 5 standard lot. I'll wait for the next one again. If there's no spike, I close $10. But on one spike, I can be making over $60 to $100, and most of the time it tends to spike. As you can see on my chart, you can see multiple times the market gets to the line, it always tends to come back down, either to the previous line downside or even to multiple lines downside. So you can just close immediately you get one spike, or you can hold for multiple spikes. And now this strategy is nowhere compared to our previous strategy. You don't need to go to your 30 minutes time frame to check if it actually simulates with the strategy. You can just go solo on your 1 minute time frame and just deal with it. I would also advise you, just on your boom and crash chart, just go to your 1 minute time frame and draw out every lines you can detect that the market spikes from. So just go and draw those lines and put your rectangle tool up there, so that as you trade on your 30 minutes, you can also check your PC and see the time the market is about to spike and just, take advantage. It's just for bonus, just for bonanza. So that's just what you get with this strategy. All right, let's get straight to it, guys. I'll make a separate video on how to properly enter as we go on, but let's just take one with a low lot size just to test how it works. So I'll quickly fast forward this video till we get to the line ahead, above I mean. So when we're about to go touch that line, I'll take in a sell so that we can see how you can actually catch the spike on your MT5. All right, so stay tuned. I'll fast forward this video and let's get to the line so we can take our sell entry to catch the next spike. All right, fam, so it's been a couple of minutes and you can see we got a small spike there. So I took my entry already. I'll show you guys shortly. We got a small spike, a very little spike, and it's not much, but we're still on the line, so we're still gonna leave that position running just a little bit. You can just hold for like, let's say 4 to 10 candles more. When you're a bit above the line and there's no spike, then you can close like 4 to 10 candles upside, but you just have to wait a little bit, or you can just hold to the next line, depends on how short the distance is. So when you do this, regardless of the spike you get, whether short or big, just wait and hold a little bit, and if you don't get any spike you can close, but you're of course expecting a spike coming. Alright guys, so you can see how this works. I use the little lot size there just to show you guys how it works. As we go, I'll make more videos about this so you guys will probably know how to enter safely. Most of you might already know this. It might not seem like much, it might just look like your regular support and resistance or your bearish and bullish reversal, but trust me, if you know how to use this with good lot size, you are going to be making your daily targets in a very short period of time. It's really awesome. I've been using it for some time now and it's been profitable. If you have a PC, just make sure you set it this way. Go ahead and draw your lines across your chart where you see multiple touches, multiple bearish reversal touches, anywhere you get a spike. In fact, anywhere you get a spike, just put a line there, because you know you're gonna get more spike at that place in the future. And when it tends to happen more than once, 1 2 3, you can see I on the rectangle tool I draw 1 2 3 4 touches. Those are the times the market gets to that particular price and tends to spike down. So of course, before the markets get to that level, you sure want to enter again and see if you can get any spike. So on this video I've been able to show you how you can predict the next spike. So now of course this is crash 1000 index, so we tend to be looking out for resistance and bearish reversal to catch the spike downside. It's vice versa for your boom indexes. You tend to look for supports, and your bullish reversals for a spike upside. So you're going to be looking at the lower levels for your boom and the higher levels for your crash. I'm using crash as a case study here, that's why we have what we have here. But for boom, you're going to be checking those multiple touches downside. So that's pretty much it for this one, guys. Thank you guys so much for watching. If you're not yet subscribed, please do like and subscribe. Please do like this video and subscribe. All right, so that's it, and I will see you all as usual on the next video. Stay safe, guys.